The median home sold price here in the greater Boise, Idaho area, better known as the Treasure Valley, overall continue with their upward trend, as does inventory. We also see in some cases that buyers' demand is starting to taper off, likely due to higher interest rates. However, and according to the data, is the higher mortgage interest rates really resulting in a cooling of the Boise real estate markets enough to result in another market correction? If you are in the market to buy, sell, or invest in real estate right here in the Treasure Valley, then this is a video you definitely want to stick around for. I look forward to being your guide. Hi there, my name is Mike Petras with MPRE Residential, powered by NextHome Treasure Valley, and welcome to another episode of Mikey's Monthly Market Updates for July of 2023. As mentioned in this video, this is where we're going to go through and look at the trends of what's happening in the Boise real estate markets or the greater Treasure Valley area, and what happened in July of 2023, and what it could spell for the future if you're looking to buy, sell, or invest in real estate right here. But of course, if you are looking to make the move right here to our greater Boise, Idaho area or the Treasure Valley, please feel free to give me a call, shoot me a text, send me an email. We'll be more than happy to come up with the perfect game plan to go ahead and get you right here. Also, please hit that subscribe button before we move forward. Hit the notification bell so that you're constantly in tune with all the videos that I do come up with. And feel free to give me a thumbs up if you like this information and share with anybody that you might know that is looking to move right here to our area. Now, as I mentioned before we go really dive into all the information, this is on a county level. So this is a very general kind of broad aspect of what's going on. And of course, we know that real estate is more of a local deal and local areas. So in terms of this, it's just kind of more or less giving the grand picture. But if you are looking to know a little bit more about, say, a city or a local area within that city, please feel free to reach out to me. But let's go ahead and dive into the data and start off with Ada County like we normally do. And Ada County, as we can see by the total single-family homes that sold in the month of July, the median overall sold price is still on the way up. In fact, actually, since the beginning of 2022, when we're sitting at 540, well, we're sitting at 540 again. So we are completely even to what we had before we started making the gains and hit the market correction in late May, early June. But since that market correction, we are down 10.34% overall when we're at the 602,250. But if we look at the 487, 495 in red, when it really were kind of at the lowest point at the beginning of this year in January of 2023, of course, we can see in April, we're kind of a little bit lower, which we'll get to, but we are actually up in Ada County in total single family homes overall, and the median home sold price up 9.72%. That is a pretty big jump. So overall, median home sales prices here in Ada County for total single-family homes are on the way up. And if we look at the 6-month breakdown, it's totally visible. Even though we went down $2,500 since last month, which isn't going to equate to a terrible amount, you can still see the upward trend, especially if we're looking back to March when we were sitting at 483, 450, then we went up to 517, 500, 532, 500, 542, 500, now down to 540 a bit. You can see the pattern. So in essence, the ping-ponging that we have, the stabilization that I've always kind of said was going to happen, that really happened between January, February, March there, we can see that upward trend. Not trying to beat a dead horse, but we can see it. So now, as always, the biggest question is because home values are supply and demand, just like just about everything else in the United States, are we going to have enough inventory out there? Is there going to be enough spread like we saw in the market correction in order to bring the median home sold price back down and create more of a market correction? Well, let's go ahead and take a look at that inventory. So looking at that graph, we can see that we got 1,445 homes available for sale out here, total single family homes in Ada County, and only 651 of those actually sold in the month of July. But if we kind of take a look at what's going on with the pendings and even the gray line, the actual solds, we can see it start tipping downwards. And why is that happening? Really because of mortgage interest rates and where they are. It's exactly what the Fed wants because they know that the housing market is very mortgage interest rate or interest rate sensitive. And looking at the inventory, the blue line, we can see it's starting to come up. So we're starting to see that gap. But if we look back to late May, early June, when the inventory just kind of really shot its way up there and created a huge gap, and you can see both the pendings and the sales were going down as the inventory was just totally increasing, creating the market correction. Are we going to get back to that kind of a range? And in my honest opinion, I don't see that happening. Why? Because real estate always cools down in quarter four as we get into the holiday seasons. So will buyers' demand continue to tip during quarter four and during the holiday seasons? Sure, but so will the inventory. And I guess now the big question is will mortgage interest rates come down again anytime soon? Well, stick around to the end of this video. We're going to go ahead and analyze that, but my guess is absolutely not. Because if mortgage interest rates were to come back down, say that there was data out there, which there is, okay, that inflation is coming back down, but the Fed wasn't able to control the markets and kind of more or less keep them off kilter instead of giving them a normal green thumb saying everything is good to go, then absolutely the inventory would be sucked away, buyers' demand would shoot up incredibly, and inflation would probably continue its upward path, which is what the Fed doesn't want. So when we look at the overall total single family home breakdown, there's of course two categories for it. There's existing homes and there's new construction. So which one's really kind of adding to the inventory here? Well, if we go ahead and take a look at the existing home inventory, we can see that we have 870 homes actively available for sale and only 460 sold during the month of July. And if we're looking at the lines here too, we can start seeing that gap spreading here between inventory and what's going on. So we're not looking like the 2019 that I've said in prior videos to where I think this is all going to intermingle and stabilize itself. But is inventory, of course, getting to the point that we saw back during the market correction? No, it isn't there. And do I again anticipate that to happen considering we're going into quarter four and the holiday season? No, I do not. But if we take a look, we are seeing that gap going up and we're seeing it pretty extensively here for existing homes. And overall for the month's worth of inventory that we have, we're sitting at 1.89 months worth of inventory, which is definitely up since last month, June. But let's take a look at new construction inventory. We have 574 homes actively available for sale and only 191 actually sold in the month of July. But you can still see that the pendings and the inventory is still kind of intermingling itself. And why is there generally more pendings out there is because, well, it takes a while to build a home. So we can kind of see that happening and we will probably end up seeing the buyer's demand kind of increase as this goes. But we can still see the pending line is on the way down and so is the overall solds that we have. So we can see a little bit of a cooling trend that's happening to the buyer's market right here in the Treasure Valley, and inventories going the other direction. But do not anticipate that a market correction, especially with quarter four again and the holidays around the corner, to really kind of impact that we saw when we were at late May, early June of last year. So in the past, I usually, or at least during the market correction, I always play the game of who was the biggest loser overall. Was it existing homes and median home sold price, or was it new construction? And let's go ahead and let's take a look at what happened with existing homes. We're sitting at $542,500, which is up just $2,500 since we had last month, which actually puts us up 0.46% since then. But I wanted to point out, these low spots. And as I mentioned when we're looking at the total single family home breakdown and median home sales price, we know that we're sitting at $479,800 at the first of 2023, but really our low point right there in yellow is at the $475,000. So, and we have been, since that low point, up 12.44% overall. So we could see that our equity has been starting to go shoop on the upward trend when it comes to the median home sold price. And if we are comparing ourselves back to the 515,100 that we had all the way back in January of 2022 to the 542 that we have today, we're up 5%, 5.05. But of course, we haven't bridged the gap, between where we're at late May, early June of 2022 when the market correction started taking hold, when it's sitting at 586,750. We are still down from that time, 7.54%. But again, the gap is narrowing. But with inventory and the demand the way that it is, we could probably start to see a lot of this stabilize itself out, especially as quarter four and the holidays start returning. But since the first of 2022, my apologies, we're up 5.05%. And since the first of 2023, when we're sitting at the 479,800 to where we're at today, up 11.55%. Let's take a look at new construction. And as we know, if you continue to watch these videos along with me, since the market correction, of course, new construction has taken the biggest hit out of the two overall. Since the market correction, new construction is actually down 21.74% when we're sitting at the $690,000. But when the median home sales price was at its lowest at the 494,900 actually in January of 2023, as compared to today where we're sitting at the 539,990, we are actually up 8.35%. So it is showing that upward trend coming back in the median home sales price overall. But we still got a lot of room to make up, especially if they're going to hit what the levels were at the median home sold price back at the 690. But if we're looking at the 588,945 that we had in January of 2022, as compared to today at the 539,990, still down 8.31%. But lately, new construction has been on a little bit of a downward path. We were kind of really rocketing up there back in May of 2023 when we hit our point. But if we're looking at the 554,900 to the 539,990, since last month, we're down 2.68%. But more or less, I would anticipate a stabilization here, especially in new construction, looking at the inventory, making the comparisons to what the demand is there on the pending lines, the solds, etc. So anticipate this. And new construction also, as I've mentioned, has the power and the capability to be able to go ahead and control their inventory, which is what they've been doing. They've basically been stopping with a lot of the specs, even though they're starting to build some spec homes now because of the hot season. But overall, they retreated back to the pre-solds to be able to stop their bleeding. So overall, who's made the biggest gains actually out of this? It would definitely be existing homes, but you can see the trend there in new construction to where they're really starting to stabilize what is going on with their prices. Even though it was on the way up, you can see it's kind of coming back down. And according to their inventory, it looks like it's going to be that way. Existing homes, that's going to be where we're going to have to watch. But again, I anticipate with Q4 and the holidays right around the corner, we should see more or less of a stabilization trend and not a market correction that we saw. Looking at the days on market, we know that we're still on the way down. We're still in hot season here, but you can start seeing it's going to start ticking back up, especially again going into Q4 and the holiday season. We're going to have a lot of buyers jumping out, a lot of sellers jumping out of the market, which is totally normal for what happens in real estate anywhere across the United States. So anticipate the days on market to start ticking back up the other direction, but it's still indicating a healthy market for what we've got, considering what we've got out there in the economics of the United States. But are we at fight levels and multiple offer levels that we had back during the pandemic when inventory is really at an all-time low and buyers' demand was at an all-time high? No, it is not there. But $500,000 and under on homes, because of the higher interest rates, knocking available buyers back down into that particular category of purchase price, we have been starting to hear the rumors of multiple offers returning, which I've mentioned in prior videos. But for buyers, and seeing that some of the buyers' demand is starting to taper off and where the days on market are, again, you're not coming out here, you're not going to anticipate to be in really one of those pit fights, multiple offer scenarios if you're in certain price categories. Another one of the telltale signs, of course, to see the health of our market is going to be the cancels and expireds. Have the cancels, say, shot up to a degree. And why would they? Because maybe sellers are getting cold feet. They don't want to sell because they don't want to lose out on their awesome mortgage interest rate that they probably have. Again, ushering in the time of necessity. I have mentioned that in prior videos too as well. We'll get to that. But also buyers that might be falling out because mortgage interest rates got a little too high and pushed them out of the house that they were looking for. But we can see here, according to the cancels, that's really kind of trending on the downward aspect. So whatever's on the market is really selling. And even the expireds there are still kind of staying at a low level. And expireds are usually when sellers really kind of hold out for the price that they want. But a lot of the sellers out there know that the market definitely is not what it was a year and a half ago, 2 years ago, especially during the pandemic. But either way, the cancels and expireds are still showing, and the days on market, a healthy market right here to the Boise area. All right, Canyon County, it is your turn. Let's go ahead and take a look at the data. And of course, this month for the median sold price that we had in Canyon County on a county level, we're sitting at 404,990, which of course we're still well below the 476,500 that we had during the market correction, which is down 15% since then. And if we are looking since the 1st of 2022, we're down 4.68%. But again, looking at the trend, if we're looking back at January of 2023, we're actually up 2.35% for when we're at the 395,445. So again, overall in the total single family homes on a county level for Canyon, prices are on the rise. Looking at the 6-month breakdown, and if you are in tune with Mikey's monthly market updates, We know that we had the ping-ponging. I said, hey, stabilization has really returned to this area, which it did, but now we're starting to tick our way up. So we were at the 389,990 back in April of 2023. Then we hit the 415, 405, and really we only lost $10. But again, looking back at that trend of the graph prior, we have started our rise. But again, is it going to stay that way? It is an inventory question, as I mentioned during Ada County. And as we can see here, we're sitting at 748 active homes for sale out in Canyon County, with only 321 of them actually selling last month. But look at the pending line. That is what I want to mention, and look at what happened back in 2019 when everything was kind of intermingling itself. But we can definitely see here, and we see the loop in the market correction late May, early June, when inventory got really out of control to the buyer's demand. See the pending line going down, gray line going down during that specific time. But look at here, we see the pendings are coming up. Even though our gray line is heading down that direction with the pendings on the way, guaranteed that the buyer's demand is going to continue to come up. But is the inventory really shooting up and making a rocket out of anywhere compared to anything else? And right now it isn't. Definitely not looking like Ada County a little bit in that aspect. So based upon the inventory for just total single family homes, I would kind of see more or less a stabilization or a low growth trend to continue in Canyon County. And then Canyon County is also more popular because it is cheaper than Ada County and is still close within striking distance to be able to get to your job if you're in Boise, Meridian, etc. And the neighborhoods are still wonderful out there. So let's break down the inventory by existing homes and new construction again. And we can see by the existing home inventory, it actually started tipping down. Maybe Q4 is coming a little bit early to there. I doubt it. I think that we might still be a little bit on the rise with inventory when we see August's numbers. But either way, it's just kind of showing that the inventory, again, is not stretching to the huge loop that we saw late May, early June of last year during the market correction. So are we going to get to that spread to where buyer's demand completely tapers off and the inventory shoots way up to create a market correction? Do not anticipate that. But again, we can see here by the pending lines in existing home inventory, it's kind of shooting up. So we will see that drop that we had right there in the gray line with the solds come up again next month in August. But really the point is that the gap in inventory compared to the buyer's demand, even though the mortgage interest rates are high, we still have some healthy markets out here and it's not shooting itself to that level to create a market correction. And with Q4 and the holidays right around the corner, do not anticipate that to happen. And especially looking at new construction inventory, we can see we only have 354 homes available for sale, only 127 of them sold. But look at the pending line. Again, whatever new construction is out there in Canyon County is just being swapped up. And of course, the pending line is going to be a little bit higher because people are waiting for their homes to be built before they can actually move into them. But again, the new construction is looking at a very, very healthy market. And overall, when we get to the median home price, you're going to see too that Canyon County's really kind of got it figured out when it came to retreating back to the pre-solds and being able to control their inventory. So again, who was the biggest loser, or shall I say biggest gainer, because we're not in the market correction anymore? Was it existing homes or was it new construction? If we're looking at existing homes here, we can see that again, we shot up again to a $399,000 median home sold price for Canyon County on a county level, which is up $9,000 since last month, which put us up 2.25%. But again, look at the upward trend. If we're looking back at January of 2023, when the housing price was sitting at $339 to the $399 that we have today, we're up 15% since that happened. Wow, that's a pretty huge gain. But we're still down below the levels that we had before the market correction, still down 6.11% when we're sitting at the $425,000. And if we're looking at the beginning of 2022, we're actually up. We're up 2.25%. So existing homes in Canyon County right now are starting to look good. And looking at new construction, again, starting to tick up slightly, okay, in this aspect. But again, Canyon County, as I mentioned, really kind of figured it out, their home builders, to be able to kind of control their inventory and keep their prices really at bay. But we're sitting at $409,990 today. If we're looking from what we had last month, we did shoot up to the $429,240, which since last month, we're actually down 4.48%. But at our low point, which is in yellow there, at the $405,859 back in April of 2023, we're actually up 1%. So a slow gain going there. More or less a stabilization pattern as we look at it over, but slow kind of ticks in that direction. And if we're looking since the first of 2023, we're only down 1.31%. But If we're looking back all the way till the 465 that we had in the first of 2022, the new construction market is still down 11.8% overall. So who was the biggest gainer? Of course, it was existing homes as compared to new construction. But again, just want to drill the point home that new construction seems to have really kind of stabilized themselves and starting to maybe tick in the upwards direction. So we'll continue to kind of watch that data, but there's nothing in the inventory that is showing that either one of these are going to be really out of control to where the inventory is going to be so high and the mortgage interest rates are affecting the buyer's demand so much to really create a market correction scenario again. But if we're looking at the days on market, we can see here that we're down to 39 days. We did tick up to 47 last month, which had me kind of thinking there for a little bit, what's going on in these markets. But again, it's still showing a healthy market. And again, not the market correction, the COVID market that we had when there was zero inventory and a huge demand when we're getting down to like 13 days and multiple offer situations. But again, like Ada County, anything $500,000 and under, because the mortgage interest rates are kind of knocking them down, you can anticipate possible multiple offer situations returning to those homes. And the other factor as to how healthy our market is doing overall, or our markets are doing overall on a county level, we're looking at the cancels. Again, those are on the way down too. So whatever homes are going up for sale are actually selling. Buyers aren't getting kicked out because of the higher mortgage interest rates. Still showing a healthy market that we've got overall to Canyon County. So breaking all this down, are mortgage interest rates really affecting the greater Boise, Idaho area, better known as the Treasure Valley, in their real estate markets, especially on a county level, which is just a general huge grab, more or less. And if you are looking for more information on specific cities or specific areas within those cities, of course, reach out to me. More than happy to give you the data on that. But overall, on a county level, we're still looking healthy. And we're still not getting to inventory levels and buyer demand levels decreasing so much as to keep prices shooting down. And with Q4 again and the holiday season right around the corner, I know I've beat this to death, but either way, we can anticipate the inventory to come back down, also buyers' demand to come back down, but again, probably not to any kind of level to where we're going to continue to create a market correction out here to the Treasure Valley. But what could we expect with inventory levels being the way that they are currently? Maybe in existing homes, a little bit of flexibility to kind of bring it more down into the humbleness, but new construction, I wouldn't see that in both counties. So now let's talk about mortgage interest rates. Where are they right now? Well, mortgage interest rates are actually back up into the low sevens. I know you're like, oh my gosh, really? Are they ever going to come back down anytime soon? Well, the good news is that on a year-over-year level, when it comes to the Fed's aggressiveness with the federal funds rate, and yes, the federal funds rate does not directly control mortgage interest rates, but does have a ripple effect to it. The Fed has the markets exactly where they want them, in a state of almost being kind of scared aspect and being uncertain about what the Fed is going to do with the federal funds rate, and is inflation really coming on the way down? Well, if we take a look at the stats, we know that year over year, especially over the last couple of CPI reports that have came out and the PCEs, that year over year, they are coming down. Inflation is coming down, which is great. And this is all happening while unemployment levels are still low, so the job markets are not affected like the Fed wants it to be. And if we're looking at the case of here in the Boise, Idaho area, basically home prices have stabilized, which is another thing that they want. But we can see those home values on the way back up, along with rental prices too, here in our area, which is something that the Fed is probably going to be taking a look at. And could it compound the inflation issue a little bit further down the road? It possibly could. But with the federal funds rate coming up another 0.25%, and they're probably going to end up doing it again at 25 basis points, it could really put that back at bay to tame any inflation. So can the Fed possibly come in for a soft landing? Well, if you watched my videos in the past, I said there's no way that they're going to come in for a soft landing. A recession is totally coming. Well, unfortunately, the data is kind of showing a little bit different. So have I been wrong in the past? Yes, I have. And could I be possibly wrong enough to where the Fed comes in for a soft landing? It very well could. But like they're monitoring the data, I'm also going to monitor that data and let you know as it comes in what is really happening out there when it comes to inflation and how the Fed is going to react to it. But back to the point on mortgage interest rates expect them to stay where they're at, probably for some time. The Fed has already made it perfectly clear that they feel that they're well anchored and they're restrictive enough now against the economy in order to keep inflation low. And with that, they also have the markets off kilter. So the markets are definitely not feeling like anything is normal right now to where they're going to go back to business as usual. And this is definitely what the Fed wants. But in the grand scheme of things, though, is that inflation is coming down without affecting unemployment. So for all of those out there that are thinking that foreclosures are just going to be on this crazy rise like we saw back in 2008 to where it's going to just absolutely tank home prices and create that situation again. 2008 was for a whole nother reason, the subprime mortgage crisis, and that is not there, and unemployment levels haven't gotten to that point. If we go into recession, do I still think with 2-to-1 jobs for people that are able to fill them, so 2 jobs for 1 person out there, will, even if we get into a recession, affect unemployment high enough to where we start seeing foreclosures return to our market on a grand scale? Nowhere near like 2008. And I wouldn't anticipate that. So do not expect the housing market to just go ahead and just up and crash itself. But as I've said in prior videos, there really are 2 ways that could possibly happen. And maybe there's some advantage to the first one, is if we lose our status as a world reserve currency. That wouldn't be good for anyone. Please watch this video up here if you want to really get in tune with what is going on with that. But if we lost our status as a world reserve currency, we would all be super broke, super poor. Hello, post-World War I Germany, which is something that we really do not want as a U.S. But right now, the yuan has been affected as of late. So the BRICS nations and the momentum that they had to be able to sway the world away from us being the status as a world reserve currency has tapered itself for now. And the second would be the balance sheet that the Fed still has. The Fed is still holding on to a lot. I want to say it's around $8 or $7 trillion, somewhere in between there, and it is still coming down. They are selling it off as aggressively as they can without really hurting the economy as much as they can. Because if they were to take all that $7 trillion that they have left and just dump it right back out on the markets right now, well, then it absolutely collapse our economy as we know it. Mortgage interest rates would shoot up to about 20 some odd percent. Well, maybe a little bit less, but it'd be horribly wrong. And then businesses would be in very, very big trouble. And that's something also that the Fed doesn't want to do to the U.S. At least I don't believe that they want to do that to hurt us all. But concerning mortgage interest rates, because again, the markets are scared, they're on the defense, expect the mortgage interest rates to stay about where they're at, maybe hover between the high 6s, low 7s, somewhere in between there until more data starts coming in showing that inflation is under control. But the other thing to watch is the balance sheet again. If the Fed were to get more aggressive at selling off their balance sheet, they could keep mortgage interest rates high. So even if they start next year, which I anticipate probably mid of next year is to when rates will maybe start coming back down the other direction, if they start selling off more of their balance sheet to get in tune, they might be able to keep mortgage interest rates where they're at and for longer. So we'll just have to continue to wait and see. But the things that we do have going is a lot of sellers do not want to sell right now because they are locked into really awesome interest rates and they don't want to go out there and sell their basically mortgage to go into a higher mortgage. Why would you want to do that? So that's going to keep inventory still at bay. Buyer's demand may be tickering down a little bit because of the mortgage interest rates, but we can still see the buyer's demand here available to this area. So our markets right here in the Boise real estate area or in the Treasure Valley, greater Treasure Valley area should be okay. So let's start getting into some of the best strategies if you are looking to buy, sell, invest, or even if you're a renter here in the greater Treasure Valley area, if you want to go ahead and get to home ownership. So buyers, let's start off with you. So what are some of the things that are totally negative right now? Well, one of them, of course, is going to be mortgage interest rates. You're probably like, wow, I mean, they're just high. And they are. I'm not going to say that they aren't. They are definitely up in the 7s, and that's going to hurt. Will they eventually come back down sometime probably next year? And I almost don't even want to say, but I'm thinking about halfway of next year or maybe around Q3 when the Fed starts to get a little bit, they start taking away and start reducing the federal funds rate is when we should start to see it dip. But either way, we are seeing the other whammy, which is housing prices starting to come on the rise, especially right here in the Treasure Valley. So right now, Prices still haven't came up, to any kind of a extreme aspect that should be able to hurt you, but you would have to deal with the pain of the mortgage interest rates. But the way things that are going, if we continue to wait for the mortgage interest rates to come down, we could almost possibly anticipate home prices to start steadily rising and really narrowing that gap between what we had between the market correction and today. So the values could definitely return themselves. I think they'll more or less be on a 3 to 4% gain overall, but we can see by some of the numbers, it really isn't that. But we're going to still start to see some maybe wishy-washiness due to the mortgage interest rates taking out some of the buyer's demand. But overall, do I think that this is a good time to buy, especially if you can deal with the pain of the mortgage interest rates for about, say, maybe a year? Then definitely, you're going to get prices as low as they're going to go, okay, at this aspect, considering that they're back on the rise with no real market correction in sight to be able to continue those prices to come down. And with inflation overall on the way down, the federal funds rate really going to start putting people out of work? Considering that the Fed really wants to put that into a balance instead of the two available jobs to one employee, two available jobs to one employee out there, I just don't see the levels coming to where foreclosures are going to come out to anywhere near a 2008 level and create serious problems in the foreclosures and the markets and pricing. So even if we hit a recession, I don't think it's going to be that strong of one. But do I think that honestly they can come in for the soft landing? I'm starting to give that more of a teeter to the Fed. So overall, in an economic picture, things are looking good. Overall, as we're looking with prices right now, we're still at a low point. Mortgage interest rates may be high, but it may be more advantageous for you to get in now, okay, and be able to take the pain of the mortgage interest rate until they come back down and refi a little later down the road. Now, of course, it is up to you and your thinking. And of course, I'm sure that you stay in tune with the markets, and you should. You should absolutely stay in tune to what is happening with inflation, how the Fed is responding to it, because it really does make a difference as it comes down to the economy as a whole. But if you would, of course, like more information or would like to know about certain neighborhoods around the Treasure Valley, maybe a little bit more specifically, and not just on a county level as broad, or you are looking in specific cities at properties in specific aspects and categories or in criteria, please feel free to reach out to me. Give me a call, shoot me a text, send me an email. Would love to be able to come up with a perfect game plan to be able to go ahead and get you right here to the Treasure Valley. Also, if you are looking for more information before you decide to make that move, please click in the description below, download my free relocation guide, so that way you're in the know before you decide to make the move. Okay, sellers, it's your turn. Well, sellers, I've been saying it for the last few months now. Why would you want to sell unless if it's out of necessity? So you got to move for family, job, etc., etc. If you have a high 2%, 3%, or maybe even 4% in these aspects, there's really no reason for you to get up, or even 5 or 6. Who knows where you're at? Why would you want to pay more money if you don't have to? And that is what is keeping our inventory levels at bay. But as we can see by this data, and I have said for some time, if you want to be successful in selling your house out here in the Treasure Valley right now, of course, this is not a year and a half ago, 2 years ago during COVID when so many buyers were out there. We can see that the buyer's market is tapering off a little bit due to the high mortgage interest rates. So again, it just shows that you have to appropriately price your home in order to be competitive in today's market. And if you are looking for more information and would like to know what you think your house could sell for in this market, please click in the description below to hit the valuation button, get yourself a free valuation, but also feel free to reach out to me, 15-30 minute appointment to be able to go ahead and discuss the best strategies in order to sell your house for the most money possible and in the quickest time possible right here in today's markets. All right, investors. Well, again, this one is a little kind of stickier than usual. We can start seeing that the prices are starting to come back up in the median home sold price on a county level in Ada and even Canyon counties. So again, it's really going to kind of come down to the mortgage interest rates, of course, if you're looking to get a loan. And if you're looking to get a loan, the more cash that you can put down, the better capitalization rate that you're going to get overall. And of course, cash is king. So if you're looking to buy in cash, now may be an absolutely great time because we can start to see that it's starting to shave away from the capitalization rate that you could possibly have. Also, believe it or not, rents are on the way back up along with housing prices. Now, will the Fed see this and will the Fed actually probably do something about it to be able to quell it by another 25 basis points? Of course, we know they just did one recently, and we always have a lag that happens to that before we actually see the results of it. But they also, according to their SEP projections, are going to do it again. So we're just going to have to continue to watch and see how the Fed reacts to the inflation data that is coming down on both the core level and actually overall year over year. But right now, as it goes, investors, if you are looking, the more money that you can put down, the better for your capitalization rate. And of course, you are going to pay a little bit more because it is a secondary property on your mortgage interest rate than you would if it was a primary residence. So please keep in tune with that too. And of course, if you are looking for awesome mortgage lenders out here in the Treasure Valley to be able to start that journey for you on a secondary property, please feel free to reach out to me. We'd be more than happy to get them in contact with you so that you can go ahead and start laying that foundation. But either way, right now, we are, again, starting to see the median home sold price, which is the point I want to drill home, starting to tick up in that direction. And of course, we know that mortgage interest rates are also high. And lastly, renters. As I say it all the time, you are paying 100% mortgage interest rate. Why? Because you're paying your landlord for it. And what are we seeing here, renters? We're starting to see equity growth come back to the market, which puts you in the same category as what it'd be for a buyer. So hit the buyer section too before you take off from this video. But either way, to recap, median home sales prices look to be on the way up in both Ada and Canyon counties overall. And I know that mortgage interest rates are high, but I do anticipate them to come down as the Fed sees that inflation is coming down, which it is, and they start getting a little bit loose and coming in for that potential soft landing on the federal funds rate and returning things back to normal. So when that happens and mortgage interest rates eventually come down, you can go ahead and refi. But in the meantime, like the buyers, you're going to feel the pain of the mortgage interest rate. It just is the way it is. But if you are looking to at least set the foundation, set the table for what could be possibly in the future or what you're looking for right now, again, please feel free to reach out to me. I know wonderful mortgage agents all over the Treasure Valley and would love to put you in contact with one of them so that you can start setting the foundation blocks right now for that potential home purchase in the future. So renters, I look forward to hearing from you. But if you have any further questions, anything about this area in general, what's awesome to do out here, etc., please continue to watch some of the videos that I do have, but also feel free to give me a call. Be more than happy. And if you are looking to move from out of state right here, you want a little bit more information before you do, please click in the description below, download my free relocation guide, so that way you're in the know before you decide to make the move. Well, thanks again very much, everybody, for taking the time out of your day to watch this video. God bless. Look forward to the day I call you my neighbor. Until then, thank you so much. Bye-bye.